Okay, now let's talk about some of the other characteristics of a trust. Let's say, in addition to special needs or instead of special needs, you want to skip a generation or you want to hold things in trust for your children, and then maybe they're financially self-sufficient and they don't need any additional gifts, but you want to take care of your grandchildren. You can set things up to make distributions to your grandchildren. Well, what if your grandchildren are under 18 at the time that you die? Well, the property can be held in trust for them, and the trustee can make discretionary distributions to them for health, education, be it high school, undergraduate, graduate school, vocational school, starting a business, having a wedding. Anything that you want can be put into the provisions of that trust. You can also fund Michigan Educational Trust or the Michigan Educational Savings Plan through a trust. It's a very nice gift to give somebody because through those vehicles, you're paying for their tuition. And if you buy tuition now, it's usually much cheaper than it's going to be by the time they're going to college if they go that way. Shouldn't exclude vocational schools either. You can set it up so they can go to vocational school. And by the way, in the MET and the MESP, even if they go out of state, you get your money. It's not like you're not going to get that money back or the value of it. But I would recommend that you look into the MET and the Michigan Educational Savings Plan. Just look them up online. They're really great programs. Okay, so there are several types of trusts that we should talk about in addition to the ones I've talked about so far. And that is, there are revocable trusts, which means that they're amendable. And then there are irrevocable trusts, and there's what we call ILITs, irrevocable life insurance trusts. And then there's a variety of others. In fact, attorneys have so many names it'll spin your head for all the different types of things that we can do and the names of all those different documents. But whether or not those are appropriate for you remains to be determined. So when you come in and you have your discussion with us, we can make recommendations as to what trusts are best for you and your family. So, to return to revocable trusts for a moment. Most trusts are revocable, which means that you can do what you want with them. They're a terrific vehicle to use for estate planning, mainly because they don't create a taxable estate. Anything that happens with the assets that you might transfer to a revocable trust are reported on your regular 1040. You don't have to get a special ID number for it. You don't have to do anything until it becomes irrevocable, which is on the death of one or both, either you and your spouse. It depends on how you want to set it up. But understand it's pretty easy to get along with. You don't have to hire an accountant to do it other than the one you normally use to help you with your tax returns. There are no special tax returns to do, and you can change it at any time. It helps you avoid probate because anything you put into that trust, you don't own. Okay? So the process of getting things into a trust is called funding, and we'll talk about that in a minute. But basically, there are various ways that we would recommend that you do funding. And some of the documents that we do assist you with that. In particular, assignments of personal property, which we'll talk about also, and Ladybird Deeds, which is a vehicle that we use to get real estate set up so it goes to your trust when you die. And also, there's other types of means of funding a trust. Most often, you want everything going to your trust, including life insurance, real estate, personal property, perhaps survivor benefits or end-of-life benefits from annuities, things of that nature, with the exception of qualified plans. Now, qualified plans are tax deferral devices, and typically there are tax consequences to naming a trust as the first beneficiary of those programs. So what we recommend that you do in those instances, talk to your financial planner. If you don't have one, we can make a recommendation as to one or more, and you can interview them and determine who you'd like to work with. But in any event, usually you don't want qualified plans payable to a trust because whatever type of tax deferral there has already been will be taxable as regular income at that time. Whereas if you have it payable to a person, the tax consequences can be mitigated and the ability to continue to earn money tax-free can be stretched out over a longer period of time as well. So that's much more advantageous than obviously having a big ding put in the amount of money that goes into the trust at the time that you die. Okay? You can terminate these trusts at any time if you want, just by canceling them. That's how revocable they are. That's what revocable means. You can revoke them, either in part or in whole. You can amend them. So let's say you have additional grandchildren. You want to add them in by name. Although we do draft these trusts to accommodate persons who are born after they're executed and initiated. But lots of times people like to add in their grandchildren and to make sure that they knew or that your grandchildren know that you were thinking of them before you died and that they were a concern to you. And it helps you connect things, and it helps with, family issues as opposed to, the antiseptic things of the legalities that we're talking about today. So that's revocable trusts. You can amend them. There are no tax consequences, anything like that.